Do you want your practice to legally pay you thousands for using your own home while you owe zero tax on that rent? I'm Jeff Greene, CPA and founder of MedTax, and this is for physicians, radiologists, and practice owners who want clean, legal tax wins without the extra hassle. Here's the plain English version of the 14-day doctor's home loophole, also called the Augusta Rule. If you rent your personal home to your practice for fewer than 15 days in a calendar year, that rental income is excluded from your personal taxes. You don't report it on your personal return when you stay at 14 days or under. On the business side, your practice can deduct the rent when it's ordinary and necessary and the price is fair. Ordinary and necessary just means common and helpful for a practice like yours. Fair market value, or FMV, simply means the price a real venue would charge for the same space and time. Use up to 14 days and you are in the clear. Use day 15 and you're paying full freight in taxes. What kinds of events count? Board and partner meetings, annual planning and budget days, staff trainings, compliance reviews, or content shoots for patient education. Real business purpose, real agenda, real people doing real work. That's what matters. Let's walk through how to do it right this year. First, pick your business reasons and dates now. Keep it within the calendar year, January 1 through December 31st. Example, September 15th for Q3 review, October 22nd for annual planning, November 12th for training, December 3rd for budget finalization. Stay at 14 total days or fewer across the year. Second, build a simple fair market value. Call or check 3 comparable venues near you: a hotel conference room, co-working meeting room, and a local society or hospital space. You're going to want to match size, hours, and amenities. Include cleaning, AV, parking, and any service fees. FMV is the average of what real places would charge for the same setup. Third, write a short agreement between you and your business. You're going to want to list your home address, dates, start and end times, purpose, and the fair market value rate. You keep it as if it was an arm's length transaction. Note what's included: living room converted to a meeting space, dining table used as a conference table, kitchen used for coffee service, Wi-Fi, and audio and visual. Fourth, actually run the meeting. Prepare an agenda, print a sign-in sheet or capture attendees in your calendar invite, take a few photos of the setup, flip chart or whiteboard notes, and team members present. You're going to want to write brief minutes with decisions and action items. Fifth, invoice your business. Label it short-term facility rental business meeting. Send it to your practice's email and billing folder like you would any other vendor. Then pay the invoice from the business bank account by check or ACH. No cash, no commingling of funds. Sixth, consider 1099 miscellaneous for rents if the total rent to you is $600 or more for the year. Coordinate with your CPA so the business reporting and your personal 14-day exclusion line up without mismatches. The key is planning the paperwork before the year is over. Seventh, keep a tidy binder or digital folder. Include your comps and FMV notes. Add the signed agreement, agendas, minutes, photos, invoices, and proof of payment. Put any 1099 miscellaneous copies there too. If an auditor asks, you hand them the binder and you smile. Quick pitfall check so you don't blow the benefit. Don't go over 14 total days. Day 15 means your personal rent then becomes taxable and you've added complexity for no gain. Don't price above fair market value. If a hotel charges $700 for a half day and your rate says $2,000 for the same thing, that's a problem. Keep market comps and stay reasonable. Don't do this without a real business purpose. Birthday brunch is not a meeting. Annual planning with documented decisions is. Here's a caution for sole proprietors. If you are a sole proprietor filing on Schedule C, you and the business are the same taxpayer. Paying rent to yourself generally won't produce a business deduction. This strategy works best when your practice is a separate entity, like an S Corp, a C Corp, or a partnership. Don't mix this with home office deductions on the same days for the same space. You can have a legitimate home office and also use the 14-day rule, but avoid double counting. Keep the records distinct and clean. And again, don't forget the 1099 miscellaneous conversation. If your practice issues one, Make sure your personal return reflects the 14-day exclusion properly. That's how you prevent mismatch notices from the IRS. Keep this risk in perspective. This rule is in the tax code. What gets people into trouble is sloppy documentation, inflated rates, or pretending a personal event is a business event. Treat your home like a real venue for the day. Keep proof, and you're on solid ground. If you want help setting up fair market value, drafting the one-page agreement, and building the binder, book a free MedTax discovery call or download the MedTax checklist by using the link below. We'll walk you through the exact steps and templates. A few pro tips as you plan your dates: spread them out so you're not scrambling in December. Use business hours, not Saturday night dinner. If you serve food, keep it reasonable and keep the receipt. And you want to capture outcomes in your minutes so the meeting clearly moved the business forward. If your rent totals are large, consider using fewer, longer days instead of many short ones. It's easier to manage agendas and documentation, and you still stay under the 14-day cap. Remember, tax laws can change and state rules differ. This video is educational, not personal advice. Confirm your plan with a qualified professional before you execute. If you're ready to implement the 14-day doctor's home loophole the right way, book your free MedTax discovery call using the link below and download the MedTax checklist today. You'll save time, lock in your documentation, and keep more of what you earn. See you at the next one.